What up, my devils? Sensei-tutum here with another video for you. So, 2 months away from the public eye, and I'm back. Figured at times like these, we probably all need to band together. And I tell you what, I'm going to commit to updating public charts on Twitter, more at sensei-tutum, more than I did before, and making a bigger commitment to YouTube for you guys. But what I'm going to ask from you guys is I'm going to try to grow this thing a little bit, because that's pretty much why I stopped. I wasn't growing, it was stagnating. Watch my last video, you'll see. Because I don't do a lot of the things that you're supposed to do, like when I'm right, which I am a lot. You know, I'm wrong a lot too, of course, but when I'm right, I'm not real big about chest thumping. I'll point it out and say how we got there and why, or just say, hey, look, this was right, what's next? And I'm probably not going to do that enough. So I'm just going to ask you guys, subscribe, hit the notification bell, like, comment. If you enjoy the content, let me know about it. I'm going to try to expand it. I enjoy teaching. I enjoy potentially making people feel better about bad times, like right now. And I like being a stick in the mud in good times. You know, not overly. Sometimes people get overly bullish. The exuberance gets too high, and you gotta bring them back down. At least if you care about them. So I care about you guys. I want to do content for you guys. I want to educate. I really actually do love it. And this is a scary time, but it's super, super important because, you know, it's opportunity. If you've positioned yourself if you've put yourself in a position where you have, you know, capital to spend, now these times don't come but so often in a lifetime. And you know, so often after something like this has happened, I hear from people, after it's happened and, you know, they missed the bottom or whatever it may be, they'll say, oh, I'll never have that chance again. Well, calm down. You will. So if you fuck this up royally, don't worry. It's coming back. You'll have another chance at whether it's this chart or another chart. I swear to you, if you stick around investing, in trading, in charts, you will have another shot at this. So we're going to try to go ahead and get it right. But just relax. If you've been in, and really though, if you've been in crypto, this is the best. These are the best opportunities if you've positioned yourself with cash. So if you don't have cash and you're all locked up in the crypto, I'm sorry. You know, that sucks. You're pretty much, you're a spectator at this point, right? Unless you're one of the many people that are capitulating, getting out of the market because they bought here or they bought here and price is now going below their entry point, right? So now they're losing money. You know, if you're not down and you're at your entry point, I can't fault you for walking away break even, never looking back. You'll regret it, but I can't fault you. So people are capitulating. Generally, when that's happening, that's the wrong move. And capitulation can go quite extended. But when I say generally when that's happening, selling when everyone else is selling is the wrong move. Let's put the volume on real quick. Look at this big volume spike today. Right? So we just started a new candle that's already tanking. So we're going to talk. Before we come through and talk about this chart too much, I posted this on Twitter today, and I said this is just the first of the branches that can stop us. You don't know which ones are going to stop your fall, and I plan on updating daily to let you know some of the other ones. So tomorrow, I'll give you guys a sneak peek for the guys that come to the YouTube channel. Just simply switch this out of log, which is, by the way, my preferred method, almost usually, unless there's specific reasons not to be, an arithmetic form, but you switch out and boom, these simple Elliott wave channel that I have drawn here. I'm discounting this wick, which you're not technically supposed to do. So if you want to draw even further down targets, you just pull this down here to the price extreme, where it should be. But I'm discounting the wick personally for now. But yeah, you just take it out of log, and we still haven't yet to meet this median again. Now, look at the last time we met this median. All right, so we'll come back to Bitcoin. But what's really going to dictate, and has been for 2 years or so now, the Bitcoin chart is ES. Now, they did decouple a few weeks ago, talked to members about it. but they seem to be back in lockstep. So let's go back here. And shortly after I stopped doing those weekly public ETH videos for you guys, I continued doing my weekly videos for members as I always have. I started doing ES because, you know, the market was tanking and, you know, way back here. So it's probably back here where I started. And it was pretty apparent that, you know, we were in for a ride. And I could go back and show receipts as I did on Twitter earlier today when somebody called me a perma bull, sort of. Said I was bullish all the time, but really haven't been. I did, you know, we did pick this bottom. We did call this long, but of course I was just looking, just for fun, looking at my last public video before this one, and it happened to be on the traditional markets, and I was talking about, okay, good trade. If you were long, you should probably think about getting out of it, and I wouldn't be mad at you if you were looking short. And then I also said, you know, showed scenarios where this sort of thing could happen. Actually, I didn't get too far advanced on the ES in that one, but like Amazon chart, I showed that, so it was pretty obvious. But what would happen here, I was letting you guys make your determinations. We were actually finishing up here. I said, get out of your longs. My recommendation was longs are, you know, time to be out of longs. You can think short, but really, you know, you could be wait and see mode. And at the time, it really was wait and see mode. You didn't lock in a good short until later on, but we won't get into that now. But basically, when I started doing these videos weekly, ES, every week for members, it was because of how correlated, you know, I care immensely about traditional markets. I know that a lot of my audience may not. But this ES chart, which is the S&P, it's just a futures chart, is so important to the Bitcoin chart, which I know we all care about. And Sam, Trade Devil, does the weekly Bitcoin videos. So I started doing weekly S&P videos because that's really going to give you the biggest compass to navigate these markets, right? And I drew this, basically the exact chart you're looking at now, this channel and this pitchfork, and said, this is the most important chart, just like this, simple as that, in the markets, and there's nothing even close, and it remains so. So just to fast forward a little bit through what we've been going through, around the bottom of this, typically corrections are contained within channels, and you know, we're talking Elliott Wave. For those of you that don't know, I'm a certified Elliott Wave analyst, master designation through EWI, you know, most reputable besides Trade Devils, of course, Elliott Wave body out there, and they're the only ones that hand out these certifications, right? So got that at the master level, means I'm qualified to teach it, blah blah blah. Personally, I don't think that means much, because it's pretty damn easy to get that. There's a lot of there's years of advancement and gained knowledge beyond that certification, let's just say. So anything normally when I'm talking, I may not put the labels on the chart like guys do. And again, one of the reasons that I'm probably bad at this social media stuff, like, but I'm always talking about Elliott Wave. So we'll get back into that. So at this area, correctives are typically contained within a channel. And we could just throw, like I did there, zigzag labeling. Let me just make it bigger. We can throw zigzag labeling on it, you know, 1, 2, 3, 4, 5, 6, 7, sort of seems like 7 swing move, 2, 3 wave, right? So could be more like a W, you know, W, X, Y, something, right? So we'll get into that as well, but basically that's what you want to focus on if you're an Elliott fan, right? But it's not necessarily important here, right? Because we know that the correctors are typically contained within the channel, and if we fall out of the channel, there's sort of contextually we can build a base case for when things would happen. So down here for the members, basically I was tracking this all the way down, wasn't calling bottom, said, you know, there was a little thing I kept saying, the avocado's not ripe yet. Avocado's not ripe yet. Down here, we said the avocado was ripe. It was time for a bounce. We got the bounce. We said, you know, it's like a 3-wave up. We're going to go down another. But this other low was significant. There was significant reason for a bounce. Of course, all the while, we're quite nervous that we're outside of this corrective channel that we would like to be contained within if it is a finished corrective, right? So we're noting that. Then we get the bounce. And at this point, I said it's a good, down here, even though we were outside of this, I said it was as good of a place as any to pick a low. And it was. And it was wrong. It was definitely wrong. But I said at the time, basically, you pick it here, and if it fails, then the next place, which I'll show you in a second, is where you pick it up. But you can take advantage of it, right? Because you can trade this long. Like, we bought this bottom. And, when as far as bags go, and and when the likelihood for a wave 2 failed, we got out of it, right? So, you make a profit, maybe not as good as you want, but then you got out gold, right? You got out green, so you got out golden, I should say, right? So you weren't exactly, depending on how you're trading this, you can do this at any degree, 1 minute, 1 hour, 1 day, 1 week, doesn't matter. This just happens to be a daily chart. You go for the next one, and then the next one, right? So I will say I'll have to take the L on this one. I always I'm always self-critical, right? So another thing that doesn't help me in the, while I don't celebrate my victories, I point out my losses, right? That's just who I am, and I'm fully transparent with you guys. I think that I in that vein, don't take any of this self-criticism too deeply, because I have a pretty high opinion of myself. So I don't think that it's arrogance. I think that it's a rational opinion. And when I say of myself, I mean of my technical ability. So to stop that rant, we were wrong. I was sort of attached to the idea that this would be motive off the low with a truncation. And you never really, this is another truncation. Now, the last truncation I did with Bitcoin was correct, right? It worked out. Did it again. This is like the only two I can ever honestly think of that I've really ever called for. Didn't work out this time. So we had what turned out to be a very atypical 3-wave move. 1, 8, we'll just draw it in. Corrective move. Very atypical. To now we're going down for another motive. But the question here is what is the degree? Because there's a little bit of a lack of clarity in the subwave structure in here. This looks 3-wave, right? This has a corrective number of swings, so you would expect, really, instead of the ABC labeling, it would be a WXY, multiple zigzag. Now, when you have that, of course, we can put in another leg, which would then be called a XZ, so technically 2 legs. However, this was really insignificant. This is well outside of, so while this is very atypical zigzag that we have drawn in yellow, which it does appear it was now, it's also well outside of expectation for the magnitude of an X wave. So probable expectation was not met a couple times in a row, which can kind of throw you for a loop, right? So when we're doing TA, as much as you're going to hear from so many different people that, this is going to happen, nobody can stop this from happening, this is going to happen, like, yeah, maybe there's guys that are like that, but really, if you're realistic and objective about the way you do these things, is you're just trying to give yourself a little bit of an edge. And when things don't, when the leadoff hitter doesn't go up there and goes up there and strikes out in baseball, you're kind of, bullshit, that wasn't supposed to happen. That guy's supposed to get on base, right? So you're basically playing, but you go up to the plate, and if you get a hit 1 to 3 times, you're doing good. We can do much better than that in trading, but think of it that way, right? You should think of it that way, is that we don't know what's going to happen, but we're going to give ourselves the best chance to win. And this is what I'm focused on, right? It's trading. So I'm not focused on being a truth, like, future teller. I don't have a crystal ball. Not my intention. Okay, so we've been rambling a little bit about our incorrectness here. So just when I want to be, fully transparent, point it out, but give you my reasoning why is that it was not expected. Period. Well, I said it was a zigzag from the start and then it'd be going down. Well, you know what? Do that 100 times, and you're going to be wrong a lot more than you're right, a lot more, because these rules and guidelines are what are meant to guide you profitably in the market. And if you go back and look at my hit rate, I think you see I do pretty well. Go watch some of my old videos. Go look at my Twitter, before you start throwing hate. And there's a reason why. We're certainly wrong, but it's because you follow these guidelines and you stick to them instead of thinking like, oh, it's just Elliott Wave. It's bullshit. I don't know. Anyway, if you're gonna follow the theory, follow the theory. And when you're wrong, you're wrong. When you're right, you're right. It's not you. It's the theory all the time, as long as you're practicing it correctly. Anyway, once we broke out of here significantly, I said this way back to the members, way back here before we ever got there. Should we break out of here significantly and not return quickly? Of course, we could return quickly again here, but I'd say we've broken pretty significantly at this point, and it's the third break. It's significant. I said that if that were to happen, that we should, how's it going to exactly play out to get there? I don't know. But we should expect to see it pretty much double the size of this. Now, again, and I was saying this last week to the guys, should that happen, we would still have expected this to come up here and break out of this channel. That's the probable expectation for next wave. Should it be, right? For any corrective, we would have expected more out of it. So that then we could have just measured from there for a 1-to-1. So something like this, right? But now we've only gone up to here. So 1-to-1's way down here. And that's still within the range of this structure, which is very important to me. Engaging that. And of course, then we want to check our Fibonacci. By the way, just so everyone knows, I'm sure that the prevailing opinion is that this is the fifth of the fifth of the fifth of the fifth, this wave here. You draw a 5, and that the world is ending, and that could be it. But I mean, if it is, what's the point of doing any of this? If you get a short and win $5 million, but the world's over, who cares? If this is the fifth of the fifth of the fifth of the fifth, who cares? Anyway, my base case is that this is another 1-2. This is a 1-2 of an all-time massive 3 that's getting put in here. Massive. And if we zoom out further and we'll go out to the weekly quickly. If we go out, see how we're accelerating as we go. We don't necessarily have to accelerate through this next wave, but should be a doozy when it happens. When will that be? Don't know. I don't really do time. So I think it's coming though. But the base case has been that should we break out of here with significance, we then should double roughly the size of this. Because to me, just to simplify things, this is your first move. And then you're going to look to put in a similar magnitude corrective, and then you get a second move or whatever. I just drew 1 instead of 2, but you get the idea. It should have been more like this. So now that we've had this compiling effect of improbable outcomes, maybe, just maybe, we never got external to this direction. Maybe, just maybe, we're still within this first move. And breaking out of this channel isn't as significant as we potentially think. And by we, I mean me. Well, usually when I say we, I'm talking about me, but I want to say we because I feel like I'm with you guys. It's us together. So, but that's something to keep an eye on. And we're at a point of it's hard to say. I do think a bounce is coming here. I mean, it's already starting to bounce there. You see this daily candle. And if it does, that'll show pretty significant. That's weekly divergence, daily divergence. We'll go down to 4. No divergence there. Well, we wouldn't expect that quite yet. But on the higher time frames, which obviously are more significant, significant divergence. Now, of course, it's harder to time exactly if you're trying to literally time to the second to buy, to use the higher divergences, because they can continue on for quite some time. They are still more significant. So all that to say, I still think that the base case is we're going to double the size of this correction at this point. Unfortunately, last week I was thinking that potentially bottom was in. I think that this could be swift move to this area before we return on, and that could be pretty devastating for Bitcoin. Really could, but Bitcoin is already kind of sold off harder, and this could be wrong, right? We could still, we're maintaining this. We're sort of maintaining a line here. If we can maintain this, turn around, get back in, not all is not lost. This is, we're in a bit of a weird situation with these things stacking up. See if we can't really draw that perfectly. Let's go back out to the 1 week quickly. Just want to see something. See if we can draw any significant trend lines. Oops. There's one broken in log, but on the Bitcoin chart I just showed you, it's not always typically my favorite. That one's broken there. Doing this live for you guys. Yeah, not seeing any help in that regard. But suffice to say, we're broken out of this we're broken out of the channel. Unless we get right back into it, that's a bad sign to me. We've been talking about this bearish scenario potentially locking in, and it seems to be doing so. I'd have to say at this point, you have to put it as the most likely scenario. We'll look for return to the channel to sort of give us confidence in that not being the case. But until it does return back, even if it bounces here, we're looking. I would be looking to fade a retest of this channel. Get down on the lower degree, start running some algos. This is on the 5 minute. This looks like a very corrective move off the lows. So. Reacting at a 50. So, yeah, I mean, I'm bearish on that. But Bitcoin, on the other hand, it's regressed a lot faster, and I think that it could be finding its bottom quicker. So we get at the log, we're already through these branches. So this is your sneak preview for this week, or for tomorrow's chart on Twitter. I was just going to show you just switch out of arithmetic, out of log into arithmetic, and boom, now we have this confluence that is potentially grabbing us tomorrow. But at this current velocity, things aren't looking pretty. But the bounce is coming. I bet you this is divergent. Oh boy, let's see. This is what you. This is. I do not suggest you catch knives, but that's something I do with regularity. I've got my hand burned on the hot stove enough. Oh yeah, that's nice. So that's a lot of divergence there on the lower time frame, and that is insinuating that a bounce could be coming, right? And then we're coming into this. All we did was same chart, just switch to arithmetic where we probably should have been in the first place. But, you know, wanted to have a chart to share today, gonna have a chart to share tomorrow. It was important. Those were the first branches. That's the way these sort of points of confluence on the way down work. You know, they may not all line up for one big fat branch. Often you get multiple points to line up here, multiple points to line up here, so on and so forth. You don't know exactly which one's going to stop you. That's why in moves like this, it's best to, if you're going to be trying to pick the bottom, to not do it all at once. Do it in tranches. Do it in ladders, right? Man. Skip down here quickly. Can we get down here and touch this? Boy, that'd be a big indicator to buy. I'm personally definitely going to be trying to pick a bottom here tonight. I'm watching this like a hawk. I don't even know if it'll be maybe we've blown through it to the downside by the time the video gets posted, but I'm going to be, as of right now, keeping an eye on that. So really the most important part is to say that Bitcoin chart, that ES chart is quite bearish. So that shouldn't give the warm and fuzzies for this chart, even if we do get a bounce, which I do think is coming. I think it's important to note here that, if we go out, we'll go to one day. This, which we're just above, we're at 21,285. This top here is clearly the next level of structural support. You got it in the VR tool here. It starts there. It's not quite picked up on the volume profile at that point, but just below that, big time. But 20K is huge. And I was saying this to members in a video a few weeks ago that we really didn't want to break this area if you're bull bias with any sort of significance and not go right back, because really the next spot was 20K. This was a great bet. This was a great spot to try for a bottom. It just didn't work out. Now, there was a chart where I had posted a truncation. I guess that was after I probably quit doing the videos. We'll just quickly address that truncation, because apparently I got called out today on that for saying it was a more bullish than potentially it was. So let's actually get back out here. We had this one the whole time as a 3-4. I showed you this chart with this count quite some time ago, that this leg down has been expected. So if anybody's watching Twitter, this has been the count. You've seen this. It was this truncation here. And then, this was a decent spot to pick a bottom. I said that we were hoping for deeper back when we were doing this. I said we were hoping for deeper. This is back when I was doing public videos, but it would have been adequate. Really, you wanted to get down into this area, and which is what I was saying way back here, is that we were going to test the previous summer lows, which we did test, and then retested and broke. And that if we did break them, that would suck, because what's happening now is happening. And then, I showed this chart with this count that was ending with this fifth wave that we're in the middle of now. They can, of course, extend past these things, but this is probable expectation that we could potentially end there. Doesn't mean it can't extend and do things that aren't always the most probable. And context is always important. So backing up to this one, we called this as a potential bottom. We picked a pivot there. It was a great pivot. It went up. Then we traded this on the way up. Beautiful trade. Then we called a truncated fifth here to say that we should trade it long for a 3/C. Well, it was a C. And I stopped before we got to here. I'm pretty sure I stopped doing public stuff. Maybe not, but where I posted, I could go find it and show receipts. But, if you really want me to, if anybody's paying attention right now and you really want to see the receipts where I should, actually, no, I posted it. I posted a finish zigzag count to the guy, Crispy Panda, that was asking, kind of calling me out on that I showed the members it was finished zigzag at the time. But basically, it was a high probability, unlike the stuff that's going on with ES right now, that it was a C. Could have been wrong. instead of a 3 for this trade out because of, first of all, the wave characteristics that we saw and the fact that this was a triangle. All of these things stack up to show that it was, very likely that this move out of it was a C and that we would continue to the downside. And, so way back here, I showed that we would be doing this to the members. And then, I don't remember exactly when I showed it on. Actually, yeah, I showed it back here around here, all the way down to here, to public. So, but the members have been they're way more up to, speed. They get more of my content. But again, if you guys can like, subscribe, hit the notification bell, share my content, spread the word. I'd like to continue sharing more often to the public. So that's where I'm at right now. I'm back. I'm going to keep you guys posted on my Twitter. I'm going to do more videos than I've done in the past. So probably try to do more than one a week. And I'm going to try to do a bunch more Twitter charts. But for right now, while this is happening, I'm going to be updating Bitcoin daily on Twitter. So you'll get an update in the morning from me, but it's really going to be, you guys that watch this video already got the short of it. So maybe something changes, maybe I post this tomorrow morning, and then maybe I should post this now because it's significant enough so you guys can potentially, somebody can see that and think about it. But yeah, so I'll be posting daily. Maybe you got a little bit of a sneak preview here. Probably not. I'll probably go ahead and post this to Twitter now. I don't want to hold back just to have a schedule, but that's what I'm going to do. I'm going to post another something tomorrow. I'm going to break the schedule already. Day one of trying to post daily for the Bitcoin. I'm going to break the schedule day one and post twice. Whatever. I'm just trying to help you guys. I want to teach you. I want you to know that, if you're a believer in the asset, and you have it, look, if you're about even and you want to get out, go ahead. If you're a believer in the asset, if you're losing your ass right now, this has happened before. It's going to happen again. But this is the time to make money. If you have capital, it's the time to deploy. Not saying right this second, just saying in general. It's proven to be true over and over and over again. Be strong. And eventually you're going to get numb to it. If you're a crypto enthusiast, your portfolio, man, up and down. There's so many little memes and YouTube videos. I'm a millionaire. Oh, I'm broke. Oh, I'm a millionaire. All in the 5 minutes of each other. So, that's the way it goes. It's the way the cookie crumbles. And right now, the cookie's crumbling. So, if you want to put a couple shekels in for a broken cookie, it could probably taste good later. All right, boys, dude out.